So what is an LLC? A limited liability company. That's what it stands for. It's not a limited liability corporation or anything else. You hear lawyers talk about LLCs all the time. You hear the accountants say LLCs. The thing about LLCs is that they do not exist for the IRS. In other words, there's no LLC tax treatment. I wish I had a nickel every time somebody said, I have an LLC. How is it taxed as an LLC? Right? No. You tell the IRS, and it depends on whether you have one owner or whether you have multiple owners as to what the default's going to be. If you have one owner, then generally they're going to ignore it unless you want it to be treated as a corporation. If it has multiple owners, then generally the IRS is going to classify that as a partnership, or you could treat it also as a corporation. It is a creature of state law. So LLCs are not something that you set up with the federal government or anything like that. You're setting up an LLC with a state, and there's different flavors depending on where you want to be. Like, so if you're big into privacy and asset protection, you might be looking at Nevada and Wyoming, right? If you are just trying to protect a piece of real estate, it's generally going to be an LLC in the state where that real property is located, right? I am going to go over a little bit of a bonus entity at the end that may come into play depending on where you're located. But for the most part, for rental real estate, we're going to be setting this puppy up in the state where the real estate is located. There's two classifications of people that you want to know about in that LLC. And the classification is this. There are members, the people that own it, similar to a shareholder, and the managers. And the managers, generally speaking, it's going to be one or more entities or individuals that are managing the entity. Sometimes you'll hear somebody say, I am member managed, which means the members all have the ability to manage. I tend not to like that unless there's a real reason for me to do it. I tend to like manager managed, and then I like to have an entity, generally speaking, acting as the manager, especially for tax purposes, depending on what it is that I'm engaged in. But let's just say there's two types of people. There's members and there's managers. And you could be both. Like I could own it myself and I could be the manager of my own LLC. There's nothing wrong with that. From an anonymity standpoint, or if we want to hide ownership of the rental property, that may be a problem. Or if I don't want people to see that I have businesses in the public record, then I may not want to do it that way. I may want to have a manager managed in that particular situation. And now, if you're somebody who says, well, you can't have anonymity in my state, I'll tell you how you could have anonymity. You could always set up an LLC in a jurisdiction like Wyoming, where you don't have to disclose the members or the managers. So your name's nowhere in a public record, and you can have it own and be the member manager of your in-state LLC. Boom. Now I'm just disclosing the Wyoming entity, and your name's nowhere to be found on any of it. And the reason that we do that is so that people don't target you because you have a bunch of LLCs or a bunch of real estate. So we're not going to dive into that right now. All right, the benefits. Let's go over 4 big benefits that come with the LLC. And this is really, I'm just going to kind of break them down, give you a little bit of example on each one. But there's inside protection, inside liability protection. What does that mean? It means that if I have a rental property and somebody slips and falls on that property, then they don't sue me individually if it's inside the LLC. So I'm just going to, there's 4 of them, but I'll call that number 1. There we go, so we're not too confusing. Is the inside liability. It isolates the risk of owning that asset into that LLC. Same thing, it burns down. And somebody's horribly hurt. They're limited to that particular asset, right? That insurance, which you always carry insurance, always carry an umbrella, but also have this protection in place so that you're not trying to leave anybody high and dry. But what you don't want is a liability occurrence happens on one property and they take all your other properties. You don't want it to where a liability occurs on one property and they garnish you for the rest of your life. In fact, a lot of times we ask, what's the worst that could happen? Let's say you're a doctor and you decide you're going to invest in a cash flow state, like let's say it's Indiana. You're going to go to Indianapolis, or you're doing Kansas City, Missouri, Winston-Salem, Shelby, Charlotte, someplace where you got cash flow properties, and you buy a property for $115,000, nice little cash flow, and then the tenant slips and falls, or they allege mold, or fill in the blank, right? There's a liability occurrence. What you don't want is them to come and garnish your wages or your income from your other jobs, or take your other assets, foreclose on your house, do anything like that, start trying to take your other assets. So the way you protect yourself is by putting them into that LLC. So that LLC isolates the liability. Let's say you have 3 of those properties. Put each one in an LLC. Right? Now, if you're 0 to 10 properties, I'm probably doing an LLC per property. It depends on your scenario. If you have more, then we're probably starting to group them. Right? Now, if I have 50 properties, I'm not worried about losing one. I may group them into groups of 5 or something. But when you're just getting started out, if you have 0 to 10 properties, right, you're going to probably be using an LLC per property, because if you lost one of those properties, it could be devastating. And then somebody might say, well, I financed it. What does it matter? They can take that equity. No, they can follow that cash flow around. Like if you're buying cash flow properties, the last thing you want is someone just to garnish the heck from your tenants and take those rents for years and years and years. You don't want to give that. So we want to isolate properties from each other. So if I have 3 properties and a liability occurrence happens on one, they don't take the other 2. So I have 3 properties total, 1, 2, and 3. Slip and fall on property 1, and it's bad. What I don't want is to lose property 2 and 3, and then my personal assets. So the LLC protects you, creates great inside liability, which is absolutely fantastic. Number 2. It also has hybrid tax treatment. And what does that mean? See if I can actually spell. It means that I can treat that LLC either as a disregarded entity, I could treat it as a partnership, I could treat it as a corporation. I get to choose how it's treated from a tax standpoint. So depending on my scenario, I could set it up the right way, but I have an LLC no matter what. So let's say that I have commercial property. I'm doing multifamily, and there's several owners along with me. I know that that LLC by itself could be a partnership. In fact, I could even have my ownership in another LLC to protect myself or to protect it from anything that I might do personally. But at the end of the day, each LLC could have its own designation. Let's say that it's just me and my wife, and we have one rental property, and I don't want the complexity of having a tax return. I could just file it as a disregarded entity, which means ignored from a federal tax standpoint. It just shows up on my personal return as a schedule on my Schedule E. Let's say it's myself and a spouse. It depends on your state as to whether you could do that or not, or whether you're treated as a partnership. Depends on if you're community property or separate property state. But it allows you to do that. So you could be, you could treat it very differently. Let's say that I had an active business in real estate. So we're talking about rental properties for the most part on this, but let's just say you're doing wholesaling, you're flipping properties or whatnot. I could still set up an LLC. And if I need to, I could have it designated as a corporation. So here's the rule of thumb. If you have an active business that you're trading your time and energies for money, then it's going to be, generally speaking, be treated as a corporation. It could be an LLC taxed as a corporation, or a corporation in general. But since we're talking about LLCs, LLC taxed as a corporation. If it's passive, I'm owning rental real estate, or if I have another type of investment, maybe it's securities or whatnot, then I'm generally speaking going to be either disregarded or partnership, depending on what makes sense from a tax standpoint and how many owners we have. So it becomes a big one. So you have active business, corporation, passive business, disregarded or partnership. That's how it's going to go. Benefit number 3. Outside liability protection. What does that mean? It means if somebody comes after me and wants to take my business away, I could set it up with an LLC in such a way that they can't take it. The most common example is, like, I like to use holding entities to hold all my LLCs. Let's say I have a bunch of properties. Let's just say, I'll use an example. Let's just say I have 4 pieces of real estate, each in an LLC. I may have all of those held by a single Wyoming LLC. And you say, why would you do that? Well, number one, I could consolidate everything onto one tax return. From a QuickBooks standpoint, I could be using class treatment, so I don't have to have a separate set of books for each of the rental properties. But also, because if something happens to me, let's say that I'm out here and I have liability as an individual. So maybe I'll use the example of, like, let's say one of your kids causes a car accident and it exceeds the liability protection you have. Maybe it's devastating accident, maybe it's one of those things where it's millions of dollars of liability. What you don't want them to be able to do is take away your properties. You want to be able to negotiate that, use your insurance to the extent, and then walk away with something. Don't want to lose everything. And especially if you're dealing with a frivolous lawsuit, you want to be able to make sure that these things are never even visible. But we can protect ourselves from outside liability by using the LLC. And the way you do it is by using something like Wyoming, where they have charging order protections or statutory protections that prevent a creditor of a member from foreclosing on the interest in that LLC. A lot of states have protections. The best states, in my experience, are Wyoming and Nevada, as far as having sole and exclusive remedy. And for single member LLCs even, you use those, and we use them for anonymity. But that works like a charm, but that is a huge benefit for those LLCs as well. And then benefit number 4 is they are perpetual. They do not die, which means from an estate planning standpoint, they are extremely effective, because I can have, like, let's say I have this structure, something happens to me and I pass away, this continues on. It doesn't dissolve, it doesn't go away. I could literally have my estate just continue to operate those LLCs. We like to use living trusts, and I would encourage everybody to watch the videos I have on living trusts. But those living trusts will prevent you from going to probate and prevent it from having to be taken apart. You could actually keep your investments together, and then you're just distributing out the profits. It's just, they step into your shoes. So your kids may step into your shoes, or whoever your beneficiaries are, or maybe it's organizations, maybe it's individuals, whatever the case. It does not die along with you. It does not have an expiration date. Hopefully you learned a lot. Hopefully you have some action items now. So if you're a real estate investor, you know, hey, there's a bunch of benefits for setting those things up. Thanks, now I know, but what are my next steps? Your next steps are to follow those 5 steps, or to give us a ring and set up a time to talk to somebody so you could see what are the benefits specifically for you. And one of the last things I will say is there's a surprise oftentimes that there's some tax benefits that flow out of these things too. I'll let that be a surprise for when you're talking to one of the reps, so that they're going through and one of our consultants is going through and discussing these things with you. You might be surprised that it puts money back in your pocket as well. As always, like and subscribe and share this with anybody who you believe will benefit. Thanks, guys.